Greetings, market watchers. I'm Emma, and here's a look at today's major financial and economic news. U.S. retail sales data. Market participants are focusing on the December retail sales report due today. Estimates suggest a 0.4% increase, which will serve as a critical indicator of consumer resilience amidst elevated interest rates and the ongoing effects of the partial government shutdown on federal employee spending. U.S. Employment Cost Index. The Q4 Employment Cost Index is scheduled for release today, with a projected 0.8% rise. This data is vital for the Federal Reserve's assessment of wage push inflation and will influence expectations for the central bank's interest rate path through the first half of 2026. U.S. Treasury 3-year note. Auction. The Treasury is set to auction $58 billion in 3-year notes today at 1 p.m. Eastern Time. Investors are watching for bid-to-cover ratios and international demand levels to gauge appetite for U.S. debt following the recent surge in yields and domestic fiscal uncertainty. Japan election aftermath and Sananomics. Prime Minister Sanae Takaichi's landslide election victory has provided a clear mandate for her reflationary Sananomics platform. The Nikkei responded with a stellar gain, reflecting optimism for proactive fiscal spending and structural reforms aimed at revitalizing domestic investment and ending excessively tight policy. Japan's consumption tax debate. Takaichi has repeated her pledge to suspend the 8% consumption tax on food for 2 years. However, she faces internal pressure from fiscal hawks within the LDP and rising bond yields, which may force a more pragmatic, less aggressive approach to fiscal spending. U.S. government shutdown economic impact. The partial shutdown continues to distort economic data releases and disrupt federal services. While some major reports like the January non-farm payrolls are tentatively rescheduled for tomorrow, the continued impasse in the Senate over border funding remains a significant headwind for markets. Kevin Warsh. Federal Reserve Outlook. The nomination of Kevin Warsh as the next Fed chair remains a primary driver of bond market volatility. Traders are recalibrating portfolios for a potentially more rules-based and hawkish monetary framework, which has already pushed the 10-year yield toward the 4.20% mark. China liquidity and property support. The People's Bank of China continues to implement targeted liquidity injections to stabilize the property sector. While mainland markets show modest signs of stabilization, structural growth concerns and soft domestic demand continue to weigh on the Hang Seng and broader regional sentiment. ECB policy and Eurozone growth. Following the ECB's hold at 2.00%, attention shifts to the growth drag from potential trade shifts. While the DAX hit 3-week highs, supported by defense and banking names, the Governing Council remains cautious about premature easing until services inflation shows further moderation. Bitcoin and digital asset volatility. Bitcoin is trading near the $69,400 level, experiencing a period of consolidation after last week's flash crash. The asset remains sensitive to U.S. regulatory signals and the broader rotation out of high multiple growth stocks into value and defensive sectors, global debt sustainability concerns. The OECD warns that rising interest rates are increasing net interest payments globally, narrowing fiscal space for G10 nations. Japan's debt burden, exceeding 200% of GDP, is under particular scrutiny as the Takaichi administration pushes for more government borrowing to finance stimulus. South Korean market stability. Regulators in Seoul remain on high alert after multiple trading halts last week. The KOSPI is particularly sensitive to global tech supply chain disruptions and the ongoing reassessment of AI-related valuations, which has caused significant capital outflows from regional tech heavyweights. U.S. housing market signals. Existing home sales data, due later this week, will provide insight into how the housing sector is adapting to current mortgage rates. A further slowdown could signal broader economic cooling potentially accelerating the timeline for future Federal Reserve rate cuts. Precious metals, technical correction, gold and silver continue to see profit-taking following their record-breaking run. Silver, in particular, has seen sharp declines as institutional investors rotate into industrial and defense stocks, despite continued long-term demand for green technology manufacturing. UBS Financial Services Conference. Major banking executives are participating in investor conferences in Florida today. Their commentary on credit quality, loan demand, and the impact of fiscal policy shifts on the banking sector will be closely monitored for clues on the 2026 economic outlook. That's it for today. If you found it useful, please give us a like and subscribe to our channel. Have a great day.